Okay, let me introduce myself first before I introduce Rahul. My name is Kelly Clement. I'm in charge of sales here at MetaStock, and I have the privilege of working with many of our partners and working with them. And Rahul is one of my favorite partners to work with. Always great. So what we're going to do here is, before I get started introducing Rahul, we are actually just going to start by talking about what we'll be talking about today. Today we're going to be talking about the RMO ATM. Within MetaStock version 10 and higher, everybody that has those versions has access to a system called the RMO. And the RMO system is probably one of the most popular systems within MetaStock, and it was developed by Rahul. Rahul got a lot of feedback that they wanted more of Rahul's methodologies. And what he did is he actually put together this next system called the RMO ATM, which stands for Automated Trend Modules. So that's what we're going to be talking about today. Okay, so for those of you, again, I talked about the system that Rahul developed, but just to give you an idea of who Rahul is, he was actually, he's been a long-time MetaStock user and a long-time reseller of MetaStock. And he's also been featured on CNBC India, CNN IBN, CNBC Awaz. Very popular speaker on the markets. We've actually had Rahul speak at several of our MetaStock users conferences and always receives great feedback. So I'm not going to spend a lot of time introducing Rahul. I'd like to go ahead and bring him on now so he can get started talking about the RMO ATM to you.
Well, good morning, folks. It's outstanding to be once again at a MetaStock webinar. MetaStock is a great product. It's a company with great people, and I think most importantly, it's a software which really fulfills the needs of every single trader and investor. It's really about how much we dig in and learn more. Well, today's presentation is really set to be a demonstration of the add-on that I have, which is the RMO ATM, or the Automated Trend Modules. What I'd really like to do today is try and go beyond a demonstration and actually educate you as well on how to best use the add-on. Probably some of you do have the add-on or are considering to use it. So I think one of the important aspects that I am going to be going over is not just about the plugin and introducing the various tools in it, but also I'd like to educate you and take you to the next step as to how do we identify and trade better with the add-on. I speak to you, friends, as a fellow trader who's been fortunate enough to actually start out pretty young in one's teens, and it'd be safe to say I've been there, I've done that. We've probably gone through all those different highs and lows and situations, so really can relate to and best from a trader's perspective. One understands the need in today's markets, how important it is to be practical, flexible, and open-minded. To start with, the RMO, which has been within MetaStock, which is probably been there now for a couple of years, maybe 5 or more, was received very well, and I'm exceedingly grateful about that, and I appreciate each one of you who've used it and benefited from it. And more than just the success of the RMO, which we built into MetaStock, I think what really spurred me on to building the ATM, or let's put it this way, the largest driving force in the creation of the ATM was actually my own trading. It was the process that I used to follow, which at one point I felt got a bit too complicated and I needed to simplify. And the ATM is all about that. It's about automation, about simplification. It's about getting process oriented. I've always been someone who's really liked to research deep, test, try different things. And finally, all this for the love of simplicity. So really what you're seeing today has gone through a lot of testing, be it on intraday markets, be it on end of day charts. One's really done a lot to really simplify the analysis process, because it's really when we can make things easy, make things simple, that I feel we're really in for much more success and comfort while trading. Now, before we jump into more and more slides and presentations, in case you do have any questions, do make a note of them, and probably once we're done with the entire session, I will try and take time out to answer each one of you as much as I can. All right. One of the most important reasons why the ATM is in, as I told you, was to make the analysis process methodical, simple, and it's really when we have this simplicity and rule-based approach coming into trading that we can actually bring in some kind of discipline, that we can actually, in a way, remove the emotion out of trading, which is one of the biggest challenges each one of us faces. Now, what the ATM is going to help me do is detect both breakout type trades as well as counter trend type trades. It's also going to help me detect sideways markets. And when I say sideways markets, it's probably going to judge the activity of the stock in terms of price, volume, and analyze if the stock's probably going to be in a sideways zone or in a trending zone, which is really very important for us because we've seen over time that the maximum amount of success in our analysis is probably when we trade active or hyperactive or trending markets. It's not when we trade markets that are really range bound or sideways. What is really different about the ATM to any other indicator that I've used, built, studied, or probably a lot of the different plugins or software that you have access to is the fact that it has the ability to become responsive if the market has sharp movements, and it also has the ability to slow down. So in other words, it's not a static value or a static indicator, it's an adjusting indicator. It's something which adapts to your chart, adapts to the pace of which that market or symbol that you're trading. How it does that is it quickly goes back in time, and most importantly goes back in the immediate couple of bars to try and see if there's been a behavioral change in the way price and volume is moving. And based on that behavioral change, it would make the various indicators adapt. So this truly is really a very interesting aspect that comes into the ATM. Now, one common question that I get is this optimization or is this adaptive? Well, these are fancy words that we could use to define this. However, let me reassure you that if the ATM marks a buy or a sell, or a blue bar or a red bar, or whichever signal that it has to, it's not a setup that changes signals. It's not something which would go back in time and suddenly wish-wash the signals out to show that it's accurate. So once you get a buy or a sell, once you get a blue or red bar, it is going to stay there, and it is not going to change under any circumstances. This is despite being adaptive. So that's one of the trustworthy features of the ATM, and I'm sure as we go along today's presentation, things would get even more clear. Now, if I could find out if the market's probably in a sideways zone or in a range-bound zone, I would be able to save myself from a lot of bad signals. So let's say if you like a particular indicator or you have a strategy or a method that you like to follow, and you detect that the market's in a sideways zone, you would actually stay out of that trade. You probably wait it out and save yourself from a possible bad trade. And why this becomes a very important aspect, because saving one bad trade is like saving actually three of them, the one behind it and the one in front of it in addition to that bad trade. So it's important to have the ability to detect sideways zones, and I think that's what the ATM is really going to do wonderfully well, and which is one of my favorite features undeniably. Another reason why we need automation, we need simplicity, is of course the markets are volatile. If you look at the left hand side where I've drawn this perfectly looking trend line, you'd be able to see that we can connect the various bottoms, the rising bottoms, and we'd be able to see a rising uptrend. Well, that's ideally like the way we'd want it to be. But if you look at the chart on the right hand side, which is red in color, this is a situation where the markets are moving in an upward direction, but in a lot more volatile fashion. You can see that there's a much more jagged zigzag upward movement. At times the pace is very fast, at times it's slow, and you may not be able to draw that perfect trend line. So what's important is to have a system or a set of tools which can detect this trend fairly easily, because it's not always that you're going to be able to draw that perfect theoretical trend line, and that's where you need a lot of adaptive capability. Now, when I use the word that the market can be traded in both breakout and counter trend fashions, let me make myself clear in case those of you who are not familiar with what I mean by breakout type trading. Well, typically breakout indicators would include most trend following indicators, to name a few: moving averages, trend line breakouts, MACDs. So when you're looking for crossovers, things like that. So coming down to the blue circled area which we have there, that's a breakout point, because that's when probably the market's gone above its averages. You start seeing a couple of the averages cross over in the upward direction, trend line breakouts, and that's where most of the indicators would really turn towards an upward bias, because there's a lot of stress which users tend to lay on breakout type strategies, which is not a bad thing, because probably that's a point where you feel more confirmed about the trade, more confirmed about the trend, and hence you're a little more confident there. But at the same time, what we also understand is when we have an upward move and then get a breakout subsequently, often a lot of movement is lost. We've already moved up quite a bit, and then we get a buy, which also puts in the risk factors at times against us. So whilst breakout is important, could be a more comforting type of trade, could be more accurate, we also need to understand the risk aspects and the fact that we could get that trade a little later down the line. Just like if you look at the rectangled square that we have on the left hand side when the market started breaking down. When the market breaks the trend line, gets below the averages, you get the crossover, you're somewhere probably exactly where that arrow is placed at this point. So probably around the 72, 73 area. That's around when the crossover happens and the market's broken down. So at that point in time, most of the breakout type strategies would indicate a sell. So that's what I mean by breakout. So breakout style of trading or breakout approaches are important, but at the same time what a lot of us tend to miss is the counter trend approach. This is the very same chart, now with the trend lines and the moving averages deleted, and here I'm trying to explain to you what is the counter trend, buy or sell. In this case, people who try and top pick or try and sell closer to the peak, it doesn't have to mean that we would always get the top, could be plus minus 2, 3, 4 bars from the top. That's someone who's trying to trade counter trend. In other words, he's in an uptrend and then he's trying to trade for a fall that is likely to come in or a reversal that's likely to come in. So that's a counter trend type of trade. Whereas if we look at the bottom half of this chart, right where the square is at the bottom, around the 50-55 levels, that is the area where you're really looking for a counter trend buy setup. So what's important when you do counter trend trading is you're trying to top pick, bottom pick, try and be a little quick, try and be a little fast. But the idea of doing it this way is to get in and out much quicker, to have a good risk is to reward ratio. And this may not necessarily mean that you have a very large hit rate. So whilst breakouts tend to be a little more confirmative and high in terms of hit rate, you might see a small margin of hit rate drop, but probably it will be equally if not more profitable. So what I'm going to talk about you today is in the ATM, both breakout as well as counter trend type of strategies, and go over both of them. So to start with, the ATM breakout catcher, that's the indicator that I'm discussing right now. And how would you get this chart? Well, you would just right click on the MetaStock chart, apply a template, and select the ATM breakout catcher. Needless to mention, you do need to have the ATM studies installed into MetaStock before using them. When you see a red colored bar, that's a confirmed signal of weakness. The breakout catcher has studied various different breakout parameters that are built into the software, which are going to result in a red colored bar. Now, what does the vertical line, the orange or the red vertical line, denote? Well, that's another visual for you to notify you that the market's breaking out on the downside. Just like when you see a green vertical, that is a visual that the market's breaking out on the upside. So it really doesn't matter. Some people like to see it in the view of vertical lines. Some people like to see it as red and blue bars. And the other bars that you see, which are the olive or the khaki colored bars in between, those are neutral bars. So in other words, we're really not trading those bars. We're actually trading where we have a first red or a first blue. Mark my words, I use the word first red or first blue, not every red and every blue. So the idea is to really try and find the first breakout, and that's what we're going to learn to do today. So this indicator is automatically going to be plotted on the chart, and when you open up a big chart like this, you'd be able to see various different lines. And just to recap once again, blue bar, green vertical, that means buy, and you'd also notice that you have strong or weak labeled up for you right at the base point or the x-axis. So when you see that it's strong, that means the market's looking good, obviously, and when you see it's weak. So this is just to make it a little more of a good visual experience. You know, I really believe that the visual experience has to be extremely good and very easy and appealing to any trader. So really the choice is yours as to which one you like to use. By default, it is going to give you the bar colors, the vertical lines, as well as the x-axis markets. You do not have to make any additional settings or changes. So when we look at the breakout catcher, it's a confirmed breakout setup. It's instead of going through different indicators one by one, you really could just look at one tool and decide whether the market's broken out on the upside or downside. And to reconfirm it, I'd really like to bring in the aspect of the ATM zone detector and zone fill. Now, just to take you back a bit, I was discussing on how important it is to trade the trending or the active markets and avoid markets that are sideways or range bound. When you look at the indicator that's put up on this slide right here, you see a marking of dormant, which means that the market is probably sideways and range bound, so you should avoid taking any buys or sells within this time. If you see that the indicator is at a value of +1, that indicates that the market's in an active zone. And if you see that the indicator is actually in a +1 area and you have the fluorescent green histograms plotted in, that is hyperactive. So just to recollect, to recap, dormant is when you see the zone detector at 0. Active is when you see the zone detector at a value of 1. Hyperactive is also when you see the value at 1, but you have the zone fill or the light green fluorescent lines plotted within that zone indicator. Which is the best place to trade? It is the hyperactive zones followed by the active zone. So in other words, if you get a buy or a sell setup, be it on any indicator, we want to make sure that it's either in an active zone or a hyperactive zone. We do not want to take that buy or sell setup or strategy if we're in a dormant market. Now when you put this all together and you actually see it as one chart, it would now make sense. Follow along with me with the first blue circle that we have there. Here you see a red colored bar or a orange vertical line pointing to a sell. The breakout catcher has identified a sell signal for us, which means I would like to take a short below the low of the red bar. The reason I always use this rule of below the low of the red bar is because if it breaks the low, that's a very good test of weakness. It has confirmed weakness. So whenever we sell, we want to sell below the low of that red bar. Or just like when we get a buy breakout, we want to buy above the high of a blue bar. Now let's try and understand here as to how do we qualify it with the zone detector. So when we get that sell, which is circled out and pointed at right now, we would like to actually take this sell because when you look up, the zone is hyperactive. In other words, this is a good signal and we want to take this trade. When you look at the other circle over here, the second circle here too, you'd notice in this buy where you have the first blue bar, as you go up you can see that the zone is hyperactive, which means this is a good buy signal and we want to take this buy. However, when you look at the red bar right there where we've got this little smiley face there and you look at the zone detector, what did the zone detector tell us? It tells us that the market is dormant or asleep. This is not a good time to be trading. Either the market's low in volatility or low in volume. It doesn't think that the market's going to be volatile. So at this point we are going to avoid taking the sell. Now that's a very big save. If usually you would have used any indicator at that point, there's a good chance that you would probably be considering short positions or would have already taken short positions. And fortunately, we're saved from taking that sell position. As you go along again over here, the second smiley face, you've got the red bar which comes in again, and this time it looks like that zone is hyperactive and has moved up, and you'd like to sell below the low of the bar. However, the low of this red bar has not broken. In other words, you've got the signal to sell, but the low of that bar has not been taken out. In other words, our trade has not been triggered. So recapping the rule, when we sell, we want to sell weakness. We want to sell below the low of the breakout bar. Just like when you buy, I want you to buy strength, and the test for strength is when you cross the high of the blue breakout bar. So very easy, very visual. First red bar, we sell. Just look at the zone detector, confirm it, go ahead. First blue bar, we want to buy. Check the zone detector as active or hyperactive. We will buy above the high of that bar. So that's the way to do it. And this is going to be a fairly easy and visual process. And I'm going to keep stressing on that because the whole idea of you using such tools is to simplify it and at the same time bring in a lot more accuracy. How is the accuracy coming? The breakout catcher is already putting together multiple tools, and to further back that up, you have the zone detector which irons out the sideways and the dormant markets. So these are examples on both daily and intraday scales, and just to give you one quick explanation on the dormant zone once again, which is really important. If you get a blue bar or a buy, which you can see there, there's one blue bar there, and you go up to the zone detector, what you could notice over there is that the market's in a dormant mode. If the market's in a dormant mode, we are not going to be taking a buy signal at this point. Alright? Just like if you see the red bar, we would like to sell below the low of that red bar. So why are we selling below the low of the red bar? You've checked the zone, you've seen it's hyperactive, and definitely you want to take the trade. Why are we not buying this blue bar? Because we checked the zone and we can see that it's dormant, which means I should avoid it, because if I avoid this buy trade, I am still going to be in the right direction and I'm not going to mess up my trading account. So here is, for those of you who trade US markets, this is a chart of Citigroup, and you can actually see this is where the market started out with a red bar, probably in the first week of April, and that red bar indicates a sell below the low. However, when you look at the zone, what does it tell us? It tells us that the zone is still dormant. In other words, we should avoid taking that sell. Alright, so we're not going to get the peak or the top or the bottom with this technique, but the idea is to get good confirmation and a high success rate, and that's what it's going to be doing, and at the same time do it in a fairly easy way. Now, why have I marked this bar? Because when the market comes down to this level, you can see that the zone detector has bumped up to a value of +1. And when you see that the zone detector is bumped up to a value of +1, what this means is now we can take the sell. The market's got hyperactive and it's all set up. We want to sell below the low of this bar. Alright, we're not going to sell anywhere. We're going to sell below the low of this bar. Where does it fire? Where does our trade fire? Probably somewhere there. That's when the trade fires, and you're still in that short position. Now, talking about stops, when you take a breakout sell, I would recommend a stop of the previous 3 to 5 bars. In other words, you'd look for the highest point in the previous 3 to 5 bars when you take that trade. We'll discuss the stops in greater detail, but that's just a quick explanation on the stops. I'd also like you to differentiate the difference between what I'd call a first breakout or a second or an add-on breakout. When you look at the red bar which we've circled there as a first breakout, why is that a first breakout? It's because that's the first red after a couple of blue. It's the first sell after a possible uptrend. Just like where you see this buy signal circled up there, this is a first buy breakout after a big downtrend. In other words, you've got a series of red, you've got a downtrend behind it, and now you have the first buy breakout. We would like to focus really on the first breakouts. I wouldn't want you to give that much weight to add-on breakouts because you're going to get that much later and much higher. For example, right there, you have a blue bar that comes up much higher. Just like when you see a red bar over here, this sell comes in much lower. So what we want to do is to try and make sure we trade the first breakout. You always have the choice to do that. You should be able to grade that, okay, this is a first breakout buy or a first breakout sell, and that's why I'm taking it. And in case you're worrying as to how do I find signals, well, you'd have a scanner that we'd give you with the plugin, and that scanner would list out stocks which have a breakout buy or sell, and would even couple the zone detector to take that whole stress out of actually going one by one and finding trade setups. So the scanner, the exploration, is going to be there to help you detect these breakout trades. So focus on the first breakouts and not add-on ones. In case you have a market, because this is a very common question, if I have a blue bar right there and I didn't buy it because the market's in a dormant mode, where do I buy it? Well, you can buy it whenever the market becomes hyperactive. So where does the market become hyperactive? Probably somewhere there. That circled bar right there, that's where the market becomes hyperactive. So buy above the high. Does it go above the high of that bar? No. So in other words, I saved myself from buying into this situation, which is good, because if I bought into this market, I would just go zigzag up and down and really make no money. It would be a very stressful and frightful experience to be there. Just like when you see blue bars, and if you see that the market is dormant, don't attempt taking that buy trade. So this is an interesting way to go about it, a very easy way to go about detecting the breakouts and trading them, and fairly accurate. Now, talking about the bit of being adaptive and responsive where needed, this is a great example which shows that. If we look towards the left hand side of the chart, probably if you could look at the areas of June, July, August, and you can see the size of the bars. If you look at the size of the bars somewhere in this area, the size of the bars are fairly small. The range of the bars is much smaller than the range of the bars, let's say in a month like October, November, December, where you can see suddenly the volatility has gone up and you can see the size of the bars has characteristically changed. You can see an increase in the movement, you can see the volatility that's come in, and automatically what the indicator is doing is slowing down. It's factoring in this volatility and trying to slow down so that it doesn't give you a whipsaw. Whereas if you look at earlier on, it was much faster and responsive. For example, when we had such sharp up and down moves, we didn't get into a sell position despite having the big sharp down move bars over here, because they were more or less intraday or very, very short-term down swings. In essence, it tried to keep you unidirectional on the buy side. So that's the good thing about the indicator. It can turn responsive and it can also lag it depending on the pace or the speed of the market, which is really important. Again, this is a good example again of a dormant market. You can see the dormant mode. When you get the buy, do not take that buy signal even if it goes above the high. Okay, so that's how I'd say that the ATM does handle the volatility fairly well. Well, for those of you folks from India, and I can see a couple of you from here, this is a chart of the Nifty index, which is our most popular index and probably the most widely traded index we have in Asia now. You can see how trended the move was from here. The blue bar comes, the market's hyperactive, and boom, you had this nice big uptrend, and the breakout catcher gets it really nice, well in time. Whereas if you look at the markets now, and we've seen some really sharp down spikes coming in over the previous week, if not for the previous 2 or 3 months, it's been very sideways, choppy, but in essence, it's kept you on the short side. So when it got you into the short positions right there with those red bars and active zones, it's helped you stay short. At no point have you got a blue bar where the high is knocked out. If you get a blue bar, it's either dormant or the high is not knocked out. So you can see the idea of showing you this chart is not really because it is from India, but it's more to give you a perspective that the market could have been trending and you got the signal, and the market could have been very choppy or sideways. If you look at March, April, May, this has been a very rough, a choppy phase, a range bound phase, and you can see how the indicator protected me. If you compare it to a typical breakout indicator, let's say if I put on 2 or 3 moving averages or a MACD or anything, I mean it's going to crisscross somewhere and probably get me in and out of different trades, which I really don't want to be doing. So directionally keeps it very clear and fairly easy, and you can see how it's handling the volatility each time it's changing. So I urge you to actually try it and come to conclusions. This is a chart of Dell computers, and this is a daily chart, and here you can actually see how the market gapped down mid-February, and you had a big red bar that comes in. So that's the breakout sell. You go up and look at the hyperactive mode, and what you want to do is sell below the low of that bar. So where do we get fired on the trade? We'd actually get fired on the trade somewhere right there. And when you're selling, what's the stop? If I go back 3 to 5 bars, that's the third last bar. You'd use that as a stop level. That stop's not taken out. You're still short. Notice you even had a buy setup that comes in here on Dell, but the market is dormant. In other words, we should not take a buy signal in a dormant zone. So the breakout catcher is definitely a favorite. And talking about stops once again, the correct stop loss is where you get the signal, count back 1, 2, 3, 4, 5, and use the top right there, and that would help. Here's a classical example of how in a downtrend you could get multiple trading signals. The reason I use MACD is simply because a lot of folks do use it when they start out, and this is a good area to actually see how the MACD is going buy, sell, quite on and off. And this is a noise which probably the breakout catcher would very comfortably cruise through. One of the hardest questions, and in fact one of the best questions that I keep getting, is how is the ATM studies different to the RMO that's built into MetaStock? Well, there's a very simple 3-point answer to that question, and the first and most simple reason is the ATM is adaptive in nature and can adapt and slow down and speed up as and when required, whereas the RMO, which is built into MetaStock, which is not the add-on, is actually a static indicator. It works to a fixed set of values. It really focuses on the long-term trend of the market. Here's a very good example to show you that. When the market fell in the month of June, July, If you use the RMO, you'd probably say, no, I don't want to go short because the market's primary trend is up because the RMO is bullish and above zero. However, if you look at the breakout catcher, what it's going to make you do is short the market right there, and that's not a small spread. You'd short, even if I sell below that low, that's going to be at 157 odd, and the market comes down to 141, 142. So that's a good 8 to 10% spread. So really the breakout catcher gives you that trading pulse. It speeds up where it sees a trading opportunity. So that's something which you'd be able to do with the breakout catcher. Another very interesting part about adaptability is right on this chart. If I looked at the triangle, let's look at the triangle, the blue triangle that we've plotted right there. Look at where that buy signal comes. Nice and early, that's the buy. You see the zone detector. The exact same chart with the standard RMO, which was built in with static values. You have a buy which comes in much later, much higher, which means a later entry, a bigger stop at the same time. And that's where you can see that the breakout catcher is much more responsive and faster. Now the question which a lot of you might be thinking, oh, so basically what I'm trying to say is the breakout catcher is going to be faster than the RMO. Well, not necessarily. Look at this. Do you see a red bar over here? We don't. If you look at this chart, they're just khaki colored bars or olive colored bars in that green square. Whereas if you look at the RMO that's built in, you do have red colored bars. So you see how it just suddenly slowed down. Just like over here, we would probably get sell setups. You'd say red bars, sell arrows, RMO negative. But if you had the power of the ATM, you'd look up and say, no, I'm not going to take short positions because the market is in a dormant phase. So you can see how adaptability helps you. Where it needed to slow down, it slowed down. When it broke out and it had to speed up for you in that triangle zone, it sped up for you. So that's really one of the key differences when we're using the ATM. So these are more and more examples, and you can see when you get blue bars, all we need to do is go up, check the dormant zone, and decide whether we want to take that or not. So if it's dormant, we're not going to take that. Just like if you have a sell over here and you see that the market is in a dormant mode, avoid taking the sell. Now after a dormant mode, if you are attempting to sell it, make sure that the market's gone hyperactive. This is a common question. I always recommend that post dormant mode, you do want to make sure that the market's becoming hyperactive before you enter new trading positions. All right. So these are more and more examples, and buy signal, hyperactive, we want to go and buy above the high. Now the reason I put this chart up is because often I get the question, what if the zone drops back to dormant and the trade's not fired? Well, once the signals come, it's come and that's on. We're not going to delete that signal. The only situation where I recommend deleting that signal is if the RMO turns negative. Well, this is at an advanced level. You'd be able to really figure this out. So here in this case, buy setup comes, hyperactive mode. We want to buy above the high. We're not going to delete the signal because the RMO is in a positive mode. Let's look at a situation where you probably want to pull out. You've got a buy setup over here. You can see the highs are not getting taken out. RMO is negative. Zone detectors dropped to 0. It's become dormant. Pull out the buy order. You haven't even been fired on on the buy side, so you've really not bought. You haven't got triggered. So you just want to make sure that, okay, I'm going to just delete the order because it doesn't look too good. We've dropped back to dormant. The RMO is still negative. There's no point to go ahead with this. Okay, so that's an interesting way to use this. These are more and more examples. This is a chart of Yahoo, and you can see it's been quite up and down on the dailies. You can see the red bars. We've marked those little red lines for you. That's the point where you want to sell below the low. Doesn't happen. Sell below the low. These lows are not breaking. In other words, you get the signal, but you're not able to get short. So in other words, it's actually working like a trailing stop. In other words, every time you get this, you protect your buys, you protect your investment by putting in a stop at these levels. And that's exactly where you want to go short, where you see that little firecracker explosive sell, hyperactive, you want to do that. All right. So that's the point. You want to take the sell position. So that's about the breakout catcher. Now let's move on to the counter trend strategy. And again, don't worry about how to apply this. Everything that I'm showing you today, you just need to right click on the chart, apply template, ATM counter trend, ATM breakout. All these templates are going to be with you and very easy to access. So what is the ATM counter trend indicator? The ATM counter trend indicator will automatically mark buy and sell signals for you and will help you try and pick tops or bottoms in extreme market situations. It's a tool which is based out of volume largely, and hence it's important to remember that you must have volume data on your chart for this indicator to work. Here's how the chart would look when you fire on the ATM counter trend expert or template. It would automatically give you various buy and sell points. The mistake a lot of us make is we try and follow every single buy or sell arrow. But the way I want to go about it is, let's sell in the first sell signal, or let's buy in the first buy signal. Use the first signal in chain. Do not say, okay, I've bought over here, let me buy here, let me buy here, let me buy here, let me buy here. That doesn't make sense. The idea is to get in on the first breakout. It's not to get in on subsequent breakouts. So let's look at the first in chain for the best entry. So the first sell. And why is it counter trend? Because this is a sell which is coming right after a rising market. You're almost near the top. Just like this is a buy that's coming in a falling market closer to the bottom. That's why we call it counter trend. Just like here, the buys are coming in after a steep crack in the stock price. So try and use signals not only which are first in chain, try and use those buys and sells which also appear to be counter trend. Do not try and use signals which are not looking like counter trend. So the counter trend indicator would actually be plotted on an histogram for you, where it checks a reading of +2 and -2, and based on that, that's how the buy and sells come up. Well, that's going to be again automatically there on your template. I do not use the histogram, and I don't think you need to do it. It's really there more for a visual and calculative purposes. So to recap, how are we going to decipher between good counter trend trades or first counter trend trades? Look at the buy setup that we have here. We buy above the high of this signal. Is this a good buy? Yes, it is, because prior to this I can see that the markets had a steep fall, and now this is the first buy in chain, and it definitely appears to be counter trend. One of the easiest ways to do this automatically, if you're a fan of moving averages, I typically recommend you plot something like a 50 period moving average or a 30 period average. If you get buys that are below the average, then obviously you're doing a counter trend buy. Just like if you get sell positions that are above the 50 period average, you know that you're selling a market that's rising. So counter trend, we want to trade against the trend. We want to try and find a bottom. So after a fall, if you get a buy, that's what we're trying to take, and that's what I mean by counter trend. Just like here, we want to sell below the low of that bar that you see. It doesn't take the low out, so you actually don't get fired. Now what happens in counter trend trading is you tend to get very quick entry and exits. All right, you tend to get buys when probably most of the indicators are yet to turn up and buy. Most of the indicators would actually turn up and say buy somewhere there, but the counter trend is very sharp. It would pick it nice and early. So use these counter trend signals. These are very powerful setups. I definitely think this is something worth bringing into our analysis, because there's a lot of focus on breakout, but counter trend gives us a very good risk as to reward ratio. In other words, if I'm risking, let's say, the 3-bar or 4-bar low, I'm probably expecting more than 1.5 times my risk, which is a pretty good deal. And what's also interesting is you're going to get these buys at much lower points, or get the sells at much higher points. So right on this chart where you see the circles, those are the trades which you really want to be taking, because those are the counter trend or the first in chain buys or sells. So this is all going to be automatically stamped for you on the chart. Now one question I've got in the past is, when I get a buy and this is the first buy, should I just buy above the high, or do I need to check the zone detector? Well, quite honestly, you don't have to check the zone detector. It's not something which I say as a must-have rule, but I think you come to a point when you feel that I need to qualify a bit, and if you see that nope, that's a dormant mode, you probably want to do that at a much lower quantity or even avoid it. So the idea is, let's try and take trades, be it on any indicator, whether it's an RSI or a stochastic, a MACD, the counter trend or the breakout. We want to try and trade in at least active or hyperactive zones. Now when you look at a buy setup which is counter trend, let's start with this one. You have a falling market. Look at the last 10 to 15 bars. You can see that dip that happened, and then you get the buy. This is the first buy. Just like you can see a sell right there, and you have a nice upward rally prior to it. So that makes it a first and a good sell, a counter trend sell. Now look at the rectangular buy. This buy is obviously going to get stopped out. You bought above the high. It probably didn't race up 1.5 times your risk. And at the bottom of that square, the previous low, that's going to be taken out and you get stopped out. Okay, so you obviously are going to have stop out situations when you try and catch tops and bottoms. In terms of an accuracy rate, it's very hard to generalize, but usually speaking, I think if the breakout catcher is working 7 to 8 out of 10 times, you probably would have the counter trend work 6 out of 10. But the good thing about the counter trend, and what really makes it much more worth it, is the fact that the risk reward ratio offered by the counter trend trades are very strong. The entry points are very early. The stops are going to be tighter, so all that does get factored in. So gets factored in because money management does play a very important role, and I'm sure a lot of you are in advanced stages of trading and have realized that. So that's the counter trend, pretty straightforward, very easy. And once again, you do have a scanner that's going to help you detect those buy and sell arrows. You don't have to go through anything manually here. It is automated, and the exploration is also pre-built. You do have the ability to scan on any time frame. So if you are someone who likes to look at daily or weekly or 5-minute or whatever time frame you want, you can set the exploration to actually look for setups within the time frame or stock list that you particularly trade. Okay. The RMO2. Well, the RMO2 is one of my favorite indicators, and that's particularly because I like trading options as well. Well, not that I cannot use the indicator to trade stocks or futures, but it's something which I've really liked and designed more from even an options perspective. How do you apply it? Again, right click, and that's how the templates look. ATM RMO2 is what you need to click on, and it would automatically plot the ATM RMO2 on the chart. Now let's try and get used to the grid that's coming up. The chart that you see is obviously the price chart. The RMO2 is this indicator right there. You've got the blue and the red lines on the RMO2, and right on top you can see is the zone detector. Now what I tried to do in the RMO2 is put in the adaptive capability. In the RMO1, where the adaptive capability was not there, the RMO2 does have the adaptive capability, and more importantly, when you couple it with the zone detector, etc., that's what makes it much more fun. Now you can see there's a little bit of a color shift. You can see orange bars, black bars, green bars. What do they mean? Orange bars means I have confirmed that the market's weak because the RMO1, the RMO2, both put together are negative, and it's a confirmed sell setup. Just like when you see greens, you're going to be looking at green because the market's bullish both on RMO1 and 2. Well, it goes without saying, you do want to further couple it up with the zone detector and then take the trade setup. So now let's get into specifics. The RMO2 plus and minus, these are two different indicators which are plotted actually within the same window, and you don't have to do this manually. Again, just use the template that is given, and it's going to be real simple and easy. When the RMO2 goes below 0, that is a weak sign. Just like when the RMO2 or the blue line goes above 0, that's a strength signal. So am I trying to say you can sell when the indicator goes down to a value of -1? Yes. Can you buy when the indicator goes to a value of +1? Yes. So it is adaptive and obviously would tend to even reduce the lag effect that you have in the RMO1. Let's look at a couple of ways to use it. First, the standard +1 -1 technique, which I just talked about. So the RMO2 goes to a value of +1. You check the zone detector is dormant. Do I want to buy here? Nope. At this point, you can see that the RMO2 has gone negative, a value of -1. So you do want to take a sell provided the zone detector goes to a value of +1. Where does it go? Probably in a bar or two, you see that goes. So I'm not exactly selling on that bar. Maybe the next 2 or 3 bars post that. It's a confirmed setup. So you've got the RMO1, the RMO2, and the zone detector all to go with you to say sell. How can it help me trade options? I know options are getting to be more and more popular, and the simple reason why it's getting to be more and more popular: A, it gives you leverage; B, there's a lot of risk protection, and at the same time, if one works on the option strategy sensibly, one could even make money in a sideways market. So options is an interesting arena to consider, but again, it's obviously a choice that you have. If you're comfortable doing options or not, that's something you need to evaluate, or you probably want to try it and see how it works for you. How exactly am I going to detect where to buy a call option or a put option? Well, when I buy a put option, it actually means that I'm bearish on the market. For those of you really new to it, if I'm buying a put, I'm actually bearish on the markets. So where do I buy a put? When you see that the RMO2 has pulled back to 0. So was that a value of -1? Right there, sucks back to 0. That's an area where you want to get into the puts. You want to buy the puts because that's an area where you want to sell the market actually, or you think that the market's going to go weak. So when the RMO2 indicator sucks back from a value of -1 to 0, that's a good area to see buying the put options. In other words, you're really bearish at that point. Why would I buy put options right there? Look at what happened prior to this. The previous 4 or 5 bars have actually been running up. And when the market goes up, puts are only going to get cheaper and cheaper. So in other words, when you buy the put right there, you are not only buying cheap puts, it also makes it much lower risk, simply because the put options have dropped in value, and the maximum amount you lose when you buy put options is obviously the premium that you've paid. So the premium is definitely going to be low on put options when the market's rising. Okay. Despite the fact that you day trade options, or you swing trade options, or you trade options for the next couple of days, weeks, you could use this for any time frame. So once again, this is on a daily chart that I'm using, and you can see the result of this would typically come out within 10 to 15 bars. So I repeat, when you buy the puts, keep in mind that I have to have at least 10 to 15 bars in terms of time. Why I use the word bars? If you're using a 60-minute chart, you probably are waiting for the next 10 to 15 hours, or the next 10 to 15 days if it's a daily chart. So what is the risk? Well, the risk is obviously the premium that you pay when you buy put options. The other bit which you need to make sure is, how do I stop out? Well, one of the good things about options is, A, you know that the premium is the maximum risk, but let's not even lose all of that. So when you see that the RMO2 is sucked back to 0, and that's when you want to buy the puts. The puts are obviously going to be at a low price. The reason why it's at a low price, market's been rallying last 3 or 4 bars. You can see how steadily it's been moving up. So put options are cost effective. You buy the puts there, hoping that the market's going to go down, and you make some money on that. If for any reason at that point you see that the RMO2 goes positive, and you further couple it up with the zone detector, you say, okay, I'll stop out the puts right above that high. So it's really low risk. So the good thing is, it's not like you're ready to lose the whole premium. You're actually prepared that if the RMO2 reverses direction for me coupled with the zone detector, I can pull out of the trade. And this is really sensible trading, because this is good risk reward management. You're looking at 1:2, 1:4 kind of ratios, and when you put that in terms of premiums, that could be exponential. So here are further examples on put options. Where do you buy puts? Every circle that you see is an area where the RMO2 pulled back to 0, pulls back to 0. These are all areas where you buy puts. And notice, prior to the circles, you'd probably see the markets rallied up a couple of bars. You'd see 4 or 5 bars running up, and that's when you bought the puts, which is really a sensible idea, because you're buying puts in a market that's rallying up, and the put options are going to be cheap, which means the risk is going to be lower, the reward is going to be higher. So that's what really makes a lot of sense. Here is another example when you want to buy calls. So if the market's pulling back to zero, and for those of you who are very familiar with options and you want to study the volatility aspects, if you see the zone detector at dormant, you know that's going to be even cheaper. The volatility is low. So obviously the call options are not only going to be cheap just because the price has dropped maybe 4 or 5 bars in a row, but also because since the market's in a dormant mode, you probably would expect it to be even more attractive when you buy the calls. So that's the bit on buying the calls and puts, and it's a very easy way to approach it. And you know, when you look at risk is to reward, it's very interesting because you're always buying puts when the market's gone up, you're always buying calls after the market's dipped a good 5-6 bars. So that's what makes the whole proposition a lot more attractive. And to top it up, you also have a scanner which can detect this for you. Just going back on that slide, well, the dual view, we have a template by the name of dual view. When you apply the template called dual view, you'd actually see both the RMO 1 and the RMO 2. The reason I built in the dual view template, I know a lot of you folks who've been using MetaStock for the last couple of years who are used to looking at the original RMO. You want to keep that on as well along with the RMO 2. That's precisely what we've done in the dual view, which looks a bit like this. So that's the original RMO buy and sell stamps that you see, along with the RMO 2 on top, which is here, and then the zone detector. So suit yourself. I personally strongly recommend you move with the new ATM RMO 2 template. The reason I tend to like this a whole lot more is simply the green bars tell you when RMO 1 and 2 both are in sync. It doesn't leave any manual process. Just like when you see orange, it's already synced it up for you. So once you get used to this, I'm sure you're going to love it. Last but not least, we have an expert advisor for each of these setups that we've discussed. And this is an expert of the RMO 2, which does a comprehensive chart checkup, and it does it on the last bar that you have on your chart. So be it a 1 minute bar, be it a daily bar or a weekly bar. So in this case, it's automatically studied Dell for me, and it tells me the breakout catcher senses a bearish impulse. Read the commentary. The zone detector suggests we're in a fairly active zone. The RMO 2 is bearish. The primary trend down is based on the RMO. It gives you the value of the 200-day moving averages, if that's a benchmark many of you use. So it's really doing that whole chart checkup for you. Again, it doesn't matter which asset class you trade. You could be trading stocks, commodities, forex, futures. It is going to analyze it for you. The only bit you want to remember is you do need open, high, low, close, and volume data. If you don't have volume data, let's say if I'm looking at an index, I probably want to look at index futures because maybe the index actually doesn't trade. So that's for the zone detector, but it's not like you cannot analyze the index. You can definitely look at the breakout catcher, the RMO 2, all that stuff would still work. But if you're looking for a zone detector to come in and support you, you want to look at a symbol that obviously has volume, and chances are whatever you're trading has volume, otherwise you wouldn't be able to trade in them. So that's the comprehensive chart checkup, and the good thing is you can keep this open on the side and even browse through your directory. So you could go next, next, next on your local folder, and it would automatically keep giving you this commentary as you progress. What's also interesting is that we have a bull or a bear sign that will come up on the chart. So very quickly, if you want to come to a conclusion, is this bearish or bullish? You look there, it's done a summation, it's done the comprehensive check, and it suggests bearishness. And that's why that bear stamp is coming up there based on the RMO 2 indicator. Alright, so that's the comprehensive chart checkup expert, which is automating the analysis for you, really taking out the whole issue about trying to think, am I doing it right, am I not doing it right? Well, if you're in that initial stage, this could be of excellent help to you as you go along. The question I often get is, now how do I book profits? I've talked a lot about entry, I've talked about how we use stops with the 3 to 5 bar model. The exits are something which we really need to factor in. The exits have to be phased out. We need to take that in 2 different phases. We cannot actually decide that we're just going to exit in one point. Usually that's the way I like to do it. Simply because when you reach a monetary objective or a financial goal, that's a good point to take some profit. So let's say if I'm on a daily chart. Personally, I think anything beyond 6-7% on a daily chart, if I'm trading stocks, looks good to me. I try and pull out at least half my positions. And then what I do is use my entry price as a stop and take it forward from there. The reason I strongly recommend we have a monetary objective is because that's going to help me be more comfortable holding on to the rest of my trade. So as you hit a financial goal or an objective, and I'm sure each one of you have that, you do want to take some profits out and then hold on with the entry price as a stop. Just to give you a layman way to actually come to this kind of an objective, in case you're wondering, how much should it be? I trade commodities or I trade FX. Well, the easiest way to do it is to actually use an indicator called the average true range. This is again available to you within MetaStock. The ATR really tells you the range within which each bar is working, the average range within each bar is working. So if the ATR value is looked at, so let's say if the day you take the trade, the value of the ATR is 2, just to make numbers easy. Let's say if the value of the ATR is 2 on the day you take the trade, I would suggest that the minimum financial objective you have has got to be 5 points, or $5, or 5 rupees, or 5 euros, whatever you're trading. So if the value of the ATR is 2, just multiply that by 2.5 approximately, maybe a little less than that if you want, but 2 to 2.5, multiply that by 2.5, and that's the base profit that I'd like to work to. So to make numbers easy, if I'm buying a stock which is $100 and I see the value of the ATR is 4, I want to be looking at a profit of approximately 10 points. Alright? Because 4 multiplied by 2.5 is how I'm arriving at the approximate profit. So if I'm buying at 100, at 110, I'm going to pull out some profits. So this is a smart way to start out with setting a financial objective. If some of you are more comfortable putting in terms of a value or a percentage, suit yourself. But I think the ATR is again a very adaptive way to come to a conclusion as to what my base target should be, instead of just generalizing it, because there's some symbols which move fast, some symbols which move slow. Stocks, forex, futures all move differently. So I think the ATR is a good way. So what's the value of the ATR that I'm using? I'm putting on a 21 period ATR here, which means it's averaging 21 bars or approximately 1 month of data, and calculating the average range. So if you are trading 2.5 times the ATR, that could be a good method to take profits. So I'm talking about taking profits. I'm not talking about stops. We know the stops are going to be the 3 to 5 bar lows that we're working on. So ATR is really to help you come to that financial objective. And once you hit a financial objective, you obviously want to use a target tool. One of the tools I really like within MetaStock is Fibonacci projection. So I don't have time to get into that, but that's something which you can explore through on Fibonacci projection. It actually helps you, based on the Fibonacci levels, set up some kind of a target based on Fibonacci ratios as to where the market's going. So use a target that you've set up, beater, support, resistance, Fibonacci level. That's the way I'd like you to go. Or ideally, once you've taken your first round of profits, wait for a sell, wait for the market to reverse, just hang in. That's the way we'd actually max out on the profit. Now, what is included when you get the ATM? So when you have purchased the ATM, for those of you who already have it, well, this is what you have. The RMO 2 indicators, breakout catcher, countertrend, zone detector, all of that I've covered today. Templates to go along with it, explorations or scans that go along with it. And of course, we've even added 2 bonus scans, which is integrated buy and sell setups. So what this means is it would actually sync everything up and see whether it's a buy or sell. Blue bar, buy arrow. Those of you all using the original RMO that's built into MetaStock. So that too is included. Does it work on intraday charts or MetaStock Pro? Yes. Does it work on end of day? Yes. Which version do I need? Well, you need anything higher than version 10 if I'm correct. So you're presently at 11, which I think is a great version with significant enhancements. So I think 11 is a good version to be using it on. That's what I'd recommend. And all of this stuff is built in and ready to go once you use it. What are the explorations that I'd get? Everything. So whether you're looking for a counter trend buy or sell, a breakout catcher buy or sell, RMO2 signals, Those of you folks looking for option trades would look at ATM RMO 2 equals to 0. That's a good way to start out if you're looking for the call and put options that we talked about. And of course, as I said, the integrated buy and sell scans. So all of this stuff is available to you pre-built within your explorations, and you can run these explorations on any time frame or any stock list of your choice. This is a good example to demonstrate how you'd run that exploration. I'm not actually running it, but this is how you do it. You'd open the Explorer, and how you do that is click on Tools, Explorer, and select the scan that you'd like to run. In this case, I ran a scan called ATM Breakout Catcher Sell, and I selected a folder that I'd like to scan, and this is the results that it comes out with. So let's say if it finds out there's a sell on Yahoo, it gives me the closing price of Yahoo, the volume that it clocked, and it even tells me that not only do you have a breakout catcher sell, you also have the zone detector, which is positive. In other words, the market's in active or hyperactive zone. So that way it helps me iron out. So whereas if I look at TSS, I can see that whilst I may have a breakout catcher sell, the zone detector is at a value of 0. All right. So it does the whole job. You really want to go for whichever has a sell along with the zone detector, whichever has a buy along with the zone detector. So these were just some dummy results that I just saved in a previous day's data, probably a day or two ago. And here we have integrated buy and sell. So when you click on ATM RMO integrated sell, so there's some of you folks who probably already use this stuff. Red bar, red arrow, RMO down. I want to find out where the three-dimensional sell setups come up based on even the original RMO model. We've added that feature for you. And again, what's good is this time you're not just going to get an integrated sell which meets all the criteria. It's also going to check the zone detector. All right. So you can actually now look for three-dimensional RMO buys and sells, which even have a zone positive on that. So that kind of wraps it up in terms of the various features of the ATM. Well, to conclude, just a couple of questions which I often keep getting. Let me just go through some pointers, and then I take some time out to answer your questions. Do you need a lot of extensive training once you get the ATM? Well, you do need a bit of practice. So probably I think about a month is what you need to get going with it. I don't think it's very complicated. You've seen what it is. There's no drawing of lines. There's no detecting of divergence manually. It's a very easy hands-free process. So I really don't think it's going to be tough for anyone to get on, no matter what level or stage you're at in terms of your trading knowledge. But what it's really going to do for us is make it an easy and methodical process. Well, asset classes, I did cover this. It does work on all asset classes. So whether you trade forex, stocks, futures, it is going to work on whatever chart you want it to run on. As long as you give it open, high, low, close volume data, it is going to run. One of the best things about it, before I wrap this up, is let me tell you, when we designed this, it's not something which was designed in the 80s or the 90s. It's been just a few years, about 4 or 5 years since we designed this, and let me tell you, it's something which we've tested, tried, worked with a lot on intraday data as well. So I'd really brand it as a new age kind of study, which is a whole lot more adaptive, because most of the stuff that you have out there, if they use the word adaptive or optimized, you've got to be careful, because sometimes previous signals do tend to flip around. Is it a black box? Well, absolutely not. I would not like to call this a mechanical black box. I do not develop black boxes. I do not believe in them. There's no substitute to the human brain. But yes, what this is definitely is going to take out that whole stress and load of analysis and help you focus as a trader. Because what happens in today's times, and I keep mentioning this, we get too stressed out analyzing charts, drawing lines, plotting 15 different indicators, and just making it a very tough process. So simplification will really help you enjoy technical analysis, and simplification will surely give you better results, in my opinion, and will really make that whole process of trading a lot more fun. Folks, I do hope you liked this presentation. I sincerely hope you managed to gain something out of it and add value to your strategies that you already may be using. A lot of bright folks. I appreciate the great turnout that we have. I can see there are people from different parts. Some of you are probably past midnight even. Sincerely appreciate you being part of this webinar. In terms of resources, Kelly would point you to probably the presentation. There are manuals when you, of course, buy the product. You do have a PDF manual that I've written, which you can go through. We also have recorded videos. And of course, for those of you wanting to see me live, the next show that I'm doing is the MetaStock conference in Las Vegas. And in case you're there, I'm going to see you there. So let's turn it over to Kelly and then questions.
Thank you, Rahul. As always, a great presentation and always very informative. Thank you so much for taking your time. I know it's quite late for you, so we appreciate you taking that time and giving us the presentation. As Rahul already talked about, here's what's included in the system. There's 6 indicators, 4 templates, 3 experts, 7 explorations, and then the bonus exploration for the RMO module in MetaStock 10 and 11. So you get that bonus, the bonus filters in there. So how to get the RMO ATM? As I mentioned in the chat window, there were a few people asking questions about it. It is $99 per month. If you're doing it month to month, there's no contract on it, and you can try it out. But I think you'd be very, very happy with what you see. If you want to pay for it by the year, it's $950 for the year. It saves you $238, but that is a contract on that because of the savings that we give you. If you'd like to order the RMO ATM, just visit us at metastock.com or call us at any of our sales numbers, and we're able to help you get the RMO ATM set up. It's an add-on that you can actually download right away and start using immediately. So I really recommend that you try out the RMO ATM. If you like the RMO that's in MetaStock, as most people do, you're going to love the RMO ATM and what it gives you. So thank you again, Rahul, for all your time and everything that you do. People love listening to you and love the instruction that you give and the systems that you provide. So thank you again, Rahul. Did you want to answer any other questions, or is there anything else that we need to do?
All right, I think Kelly's gone through the commercials. Thank you, Kelly, once again. It was great being part of this session. But just to go with the questions that I see up on that chat window, and in case you're still around and have a question, feel free to type it in, and I'm going to take 5 or 6 minutes to answer as much as I can. Well, on the pricing, as Kelly mentioned, there is no one-off price. You do need to go in for an annual at best, or the monthly, which you have available. Okay, Abhishek, you have a question using the ATM, breakout, catch, or buy. Right, so the ones which are hyperactive, Abhishek, those are the ones you really want to be focusing on. But let me tell you, you really want to analyze and check that you are trading a first breakout and you are trading something that's ideally active or hyperactive. Okay, so what's really more important is first breakout, active or hyperactive. Preference to the hyperactives, yes. Hub, I appreciate you using the RMO for 6 weeks now. I'm glad you like it, and I'm sure you'd really like the ATM. How do you cherry pick? Well, with the ATM, you have the integrated buy and sell, which even scans where you have all the 3 setups for buy and sell on the original RMO system that's built into MetaStock. So if you're looking for a blue bar, buy arrow, all of that stuff together, this exploration is going to be able to give that to you. Well, can this be used on 5-minute charts? Absolutely, you can use it on 5-minute charts. In fact, when we designed it, I did do a whole lot of testing on 5-minute data as well. So yes, you can use it on real-time charts, real-time data with MetaStock Professional. And does it work well with Forex currency pairs? Yes, it does. But the only thing to remember is if you are trading the FX markets, I do not think you probably have volume data. So you may not be able to use the zone detector, but everything else is fully usable. And I definitely think it works well there. So Forex currency pairs, the answer is yes. And if you do have volume data on that chart, even better. Does the accuracy increase with higher time frames? Well, it's very hard to generalize. It would really depend stock to stock, Amol. But yes, you could say the dailies would be maybe a shade more accurate. But then again, when you it's a question which depends on the symbol that you're using. So when you get it, the best way to test it, in my opinion, is go back the last 20-30 signals at least, see how it's been working, and I'm sure it's going to be working a lot better than most of the conventional stuff, since it is integrated, has the capability of being adaptive, has the zone detector. So I think yes, it's going to work. All right, I live in Brazil, have local real-time data. Can the ATM? Well, as long as you have MetaStock and you have MetaStock data, there's no reason why the ATM would not work. So no matter what's your data feed or exchange or provider, as long as it's MetaStock data and it's running in MetaStock Pro, it's going to work. So be it MetaStock end of day or Pro. Okay, does it work well with the MCX? Yes, it does. MCX is the local exchange we have for commodity futures in India. Absolutely, we have tons of customers using it on the MCX chart, so that should be no problem at all. Is there a way to correlate RMO signals between end of day and real time? That is to see different time frames which agree with each other. Well, great question, Tim. I think the answer to that one is yes, it's probably going to be easy because you have the comprehensive chart checkup. What you could do is load a chart, let's say on a 5-minute, and let's say you want to compare it with a 60, you just move it to 60 and the commentary would automatically move in. But probably not, it's not going to give you a 100% automated way to do that. I don't think we can do that for really any other indicator or plugin that I know of. Do I recommend the system for intraday or only on daily? I use it for both. And as I said right in the beginning, I am a very active trader. I probably put my money on the markets every day. So I cannot generalize and say that no, don't use it on a 5-minute or daily. But just on a personal note, I tend to like time frames of 15 minutes and higher when I trade, and that's simply because day trading at times could be really stressful and you probably have to be on your toes. But again, that's just a personal opinion. There could be folks here who even trade 2 or 3-minute charts. It really depends on your style and approach to trading. I kind of like to feel a little more comfortable with the 15-minute and higher time frames. Do we use the zone detector on the counter trend indicator, John? Yes, absolutely. I think it's a good idea to integrate that. But when you get a buy or sell, and if it's a first signal, you definitely want to take it with or without the zone. But what you can do it is, if you see that the zone's dormant, you want to temper that quantity down a bit. So that's all I'd say in terms of integrating the zone with the counter trend. How about a weekly? Well, absolutely, the weekly works great. I think weekly charts should really cruise along, whether it's a breakout catch or the RMO tool. The only thing you want to keep in mind when you trade weekly charts is the fact that stops are always going to be very high MO. So keep that in mind. You might get a good buy and you see a big run up, but even if I use the previous week's bar low as a stop, that's going to be a really big stop. So make sure it's affordable and you have that kind of time frame to go with. Is there a free trial? Well, if you want to use the ATM, you can try it for a month. It's not a free trial. You'd be charged $99 for the first month. If you don't like it, you may not choose to renew it. And if you like it, you may go for the yearly. So you would need to purchase it for 1 month. Jamie has a question. If I am not able to buy at the first blue, is it advisable to enter in the middle of the trend? Well, the way I handle this situation is, and I'm sure we do go through that situation, is we miss the first breakout for some reason. If I get the market or the price somewhere around the area where I should have originally bought it, that's where I'd like to enter. So that's an area which you could pick on. And if the markets actually run up a whole lot and you still feel bullish about it and you want to enter, I think where the bars turn olive, that's where you can actually start nibbling in and getting in, because your stops are going to be tighter. Because let's say if you suddenly do get a red, you would have the ability to be responsive. So probably if the price ticks down near the entry area, or if the bars get olive, that's where I'd probably enter mid-trend. Can we use the exit swing signal for the stops with the breakout catcher? I really don't think you need to, because what's going to happen is the breakout catcher would continuously give you add-on buys and add-on sells, and that's going to help you upgrade the stops. So you don't have to. I mean, I'm trying to take the load out. I'm not trying to add more into it. What is the meaning of neutral bars? If I'm short, what do I do on a neutral bar? Rajendra, when you see a neutral bar or an olive or khaki colored bar, that means the breakout catcher has neutralized temporarily. Well, from neutral, it could typically go red or blue, so you definitely want to keep an eye on it. In case it reverses trend, you should stop out. So the decision on a neutral bar is to just hold on and be alert that in case a trend change comes in, I do want to stop out and reverse. ATR value, yes, it's 21 period ATR. Reason I use 21, you have approximately 21 trading days per month. And it's a Fibonacci number if that helps. All right, that's great. I think we've gone through most of the questions. Okay, let's take this last one. If we placed an order in active zone and it did not trigger, can we cancel? If you have placed an order, be it in active zone, this is a very good question. So if you're in active zone or hyperactive zone and you've put in an order, you should cancel the order if the zone detector drops down to 0. If it becomes dormant, you should delete the order. If it's not fired, you no more want to fire that order, and you should delete the order by checking if the RMO has become negative. So let's recap this. You've got a buy signal, hyperactive zone on the breakout catcher. You want to buy above the high. Doesn't go above the high, all you do is delete the order when the zone comes to 0 if the RMO is negative. Okay, so good question. So keep that in mind. George, I think you can download it. You don't have to wait for a package or shipment or anything. It's all online. So you could go to equus.com/Veritech or metastock.com and just sign up for it and download it. So you'd be ready to go in a couple of minutes. Okay, Kelly's been kind enough to type in the link. Well, the price in INR, well, the INR is approximately 54 rupees. So you can do the math there. We do round it up in India a bit. So feel free to call us. If you want to call us at Veritech, our number is +91, which is the country code 33-400-599. I am going to key that in for those of you folks who are in India and need some assistance. That is our office number in India. We're open from 9:30 to 5:30 p.m. All right, thank you once again, folks, and I look forward to many more webinars and hopefully seeing some of you guys live in Las Vegas. Thank you once again.